Kristo and Dan, thank you for joining me today. I first want to get started by talking about the initial idea for your companies. Kristo, TransferWise is now in 60 countries, but how did this start? I understand there were some frustrations with money exchange from Estonia involved.
Indeed. So TransferWise is this grassroots phenomenon that started in London about 5 years ago, and we're now in 60 countries. We're moving about $750 million every month on behalf of people who need to move money internationally. And as we were introduced, the thing that we pride ourselves with is we put about $1 million back to consumers' pockets every day. So as today finishes, there's $1 million that the banks didn't get, and it goes back to consumers. But back to your question, how did it all get started? It was a very personal problem. So I realized when I was moving my salary back from London to Estonia to my savings account that the bank gives you a very different exchange rate to what you're expecting if you look at Bloomberg or Reuters or what the market really does. And I realized that it takes about £500 of every 10,000 that I send. So I was really pissed off when I saw my money being taken in broad daylight. And then I had a friend who had the exact opposite problem. So we started trading with each other. So I gave him my pounds and he gave me his euros, and we cut out the middleman like this. So both of us saved like £500 on each side. So this was the kind of the original solution to the problem. And then 2011 we started TransferWise, which basically industrialized this idea. And from there on, it's been so popular, we've just had to add countries as we go along.
Dan, talk about how you got started. You're featured in the Michael Lewis book, Flash Boys.
Yep.
You were at the Royal Bank of Canada, developed a very well-known stock trading platform. What made you want to do something further, to do something on your own?
Got it. So, yep, I worked at Royal Bank of Canada straight out of college. I worked in stock trading. So we built trading algorithms to trade on behalf of institutional investors, so mutual funds, pension funds, hedge funds, family offices, and help them navigate the stock market, trade on all the different exchanges. It's a very fragmented market. So at RBC, we kind of put our name on the map, where we built some kind of very successful trading strategies, and really kind of our big thing at RBC was it was all about being very, very open and honest and transparent with our customers. RBC is a Canadian bank. It has a very good reputation for being nice and honest. And so that's how we kind of got known in the industry.
Yeah.
And the idea was, really all the time at RBC, we were always talking about startup ideas and things totally off the wall, not even within finance. But we never really took any of that seriously. But one day we were all kind of talking together about what's going to be the next thing. And we thought about this idea of kind of taking a lot of the same philosophical things we were doing at RBC, using our knowledge of how the stock market works, but trying to do it on a bigger scale. So trying to take those benefits and move them into the exchange space so that our customers could get those benefits no matter where they traded.
Now, you told me earlier that you actually have 9 founders, which seems to be quite a high number. And also that this trying to create a stock exchange is not exactly an idea you hatch up from your garage.
Yeah. So yeah, we started with 9 people, 5 of whom were very senior people. 8 of the 9 came from RBC, so we were all worked together at RBC, and then there was one very, very senior person from NASDAQ who joined us, and that was the founding team. So yeah, it wasn't kind of a small effort in the beginning. Basically, we all got behind our leader, Brad Katsuyama, who is the main character in Flash Boys. He's just an unbelievable person, unbelievable leader, and I think he kind of rallied us all behind him. But yeah, like you were saying, starting an exchange is not an easy prospect. It's the regulatory hurdles just to get off the ground are crazy. In addition to the technology hurdles, basically, when you go live as a stock exchange, you need to. The way the regulation works is that you need to see all of the trading activity on all of the other markets in real time, so that you know the fair price of a stock at any given moment, so that you can ensure that you're trading in line with where the rest of the market is trading. And so you need to be able to consume all of this data in real time, process it very, very quickly. On day one, we basically needed to have the same technology stack that a NASDAQ or a New York Stock Exchange has before we traded a single share.
But I think, Dan, what you have proved, and I think what's the most powerful thing, that we're now seeing things like exchanges. There's huge mystery. Things around banks, there's huge mystery. They seem to be those very difficult things to to replicate. But actually, they're not. You can start with 9 people
true.
in a garage.
Yeah.
You can start international payments with 2 people. You can start lending with just a couple of people. Apparently, it takes no more than 14 people to start a licensed bank in the US. So I think we're now starting to see in this space that actually tech companies can replace parts of banking or exchanges or trading.
And I think the big thing that's changed, so one thing is that technology has really made a lot of this stuff accessible, but also it's just made information about how the market works so much more accessible. There is a lot more visibility into how things work. And for us, coming from within the industry, I think it really was helpful that we had that knowledge going into into this project. But the fact that, there's books out there, there's the internet, there's ways to learn all of this.
Yeah, we definitely owe it to guys like Skype who changed the roaming charges in the past, and Amazon, and hopefully what we're doing now gives inspiration to the next disruptors.
Kristo, can you talk about what you do? You said initially people thought you were crazy. And my question earlier is, well, why don't the big banks just do this? I mean, it seems like a simple proposition. Why don't they turn around and copy what you're doing?
That's a very good question. So with banks, if they did, we wouldn't have this problem. So we wouldn't have to build TransferWise to get around hidden fees. But of course, banks have no incentives to A, tell you what they're charging you if they can get around it, and B, they have no incentive to charge you less, because if there's no transparency, there's no competition. So if you look at the problem that we're solving, you're moving money abroad. The bank tells you it costs you $35 wire fee. What they don't tell you is you lose 5% on the amount that you move because they give you a different exchange rate. So there's no incentive for them to change. And I wish there was, because then we wouldn't need to do what we do. I cannot really imagine the day where the bank comes out and says, hey, dear customers, we've charged you like billions of dollars of hidden fees. Now we decide to come out in the open. We're not going to do this anymore. It's $200 billion globally that gets taken from these international transfers.
I want to talk about regulation. Obviously, there's the promise of new technologies, but in fintech, you run straight into regulatory obstacles. Could you please describe, Dan, the process that you're going through? You are in the middle of applying to be an exchange in the United States, and your application has been delayed twice. It seems that big banks have all lined up behind you, but there's some very powerful interests that have lined up against you.
Sure. So like I was saying, it's a pretty big hurdle just to get off the ground from a technology perspective, but the regulatory side was also quite a hurdle. We started the company in early 2012, and from the very beginning, we had this kind of vision that we would try to become a stock exchange, and first you need to get approvals from FINRA, from the SEC, and so we're in that process now. We began socializing with them probably 2 years ago at this point. And we were supposed to get a decision from them in December, and they asked us to extend it until March, and then in March, they still weren't ready, and so they extended it themselves until June. And so at this point in June, we're hoping to find out from the SEC if we can be a full-fledged stock exchange, or if we'll have to continue operating as the sort of kind of pseudo-stock exchange that we are right now. At this point, we're already about 2% of the US stock market, so we're in pretty good shape, and we can continue on
And
this
the New York
path,
Stock Exchange, by comparison,
is about 10%. So we're doing reasonably well, but to make that next leap forward and to be able to kind of extend our services to a broader population, we need to get exchange approval, and it's just.
And could we take a moment, could you describe the coil or the technology that you came up with that is attempting to basically make the playing field even for individual investors over the exchanges?
Sure. So we haven't really talked about what IEX does, and our big principle is that we want to basically expose and educate the public on the existing practices within the stock market and some practices that we consider unfair, and then try to offer an alternative. And so one of those practices is what happens when the price of a stock is moving. So the prices of stocks move up and down throughout the day, all the time. But when it's actually in transition, there's kind of a brief window of opportunity where the price of a stock has changed, but the exchanges and the dark pools and all the different places you can trade a stock, those venues themselves don't actually know that the price has changed, and so they're still willing to execute trades at the old prices. So the price of a stock moves up, a very, very fast buyer can come in, knowing that it just changed and buy at the old lower price on a platform that's not as fast, that doesn't realize that the price of the stock has changed. And so what we do is we delay every single order that comes into our system to make sure that by the time that order hits our system, we have the most up-to-date view of what's happening, and we have a more up-to-date view than whoever initiated that order. So what we do is we coil a cable for about 38 miles, and so every message, everything's electronic, but this message travels this cable for 38 miles just in circles in a loop. And by the time it actually gets to our system, which is a third of a millisecond later, that's enough time to make sure that whatever trades happened elsewhere, whatever quotes changed elsewhere, we've seen that and that we can adjust our prices accordingly.
Kristo, you say you run into people all the time who say, "Oh, I don't need your service. I have free banking fees. I use one of the big international banks." Do people just, and you've also had to get regulated, speaking of regulators, in every state in the US that you do business in. Do people just not have an understanding of the delays, the fees, and the way that exchange rates work?
Yes. So this is that makes it really interesting, and I think we have a similar challenge. There's information arbitrage. People who have the information, benefit from the people who don't have the information. So regulation in our case is actually useful. So we're dealing with people's money, and we should be regulated and licensed, and we were from the first transaction, just to make sure that it's orderly and the baddies don't get access to money and so on. But actually, what we're seeing now, the opportunity with regulation is that you can create a level playing field by injecting transparency into the system. Now imagine if at the moment you go to HSBC, you say, I'm the HSBC Premier customer from here, and transfers are free. Surely they aren't. The bank's going to take 4% of your money on the exchange rate. So
and not give it back to you.
And of course they won't give back to you. They would put it into bonuses and dividends. But then imagine if that was transparent. So imagine if the bank told you that, yes, you're sending $10,000, and yes, we charge you a $400 fee. So there's nothing wrong with it. Free market. You can use a very expensive service if you want to. But I think it has to be transparent, and that's where regulation comes in. It could come in. It doesn't at the moment, but I think there is an opportunity to create a level playing field with the old, obscured industries and the new tech companies that can actually do this much better.
There's a lot of talk in the US right now that fintech has an advantage in the UK and Europe, perhaps not because of less regulation, but more the ease of operating. Would you agree with that? And do you think Dan's experience is perhaps emblematic of that?
The experience is slightly different, but for us, definitely, we're seeing something interesting in Europe. They did something clever about 10 years ago, which was create a single kind of regulatory licensing environment across the 27 member states. So as soon as you want to start a new product in Europe and you get a license to offer that service, you get access to a 600 million people market. Like immediately. That's like massive scale, a massive opportunity for scale. Whereas in the US, if you're dealing with money, you would normally get what is called a money service business license, which is a state-by-state affair. So your best chance is probably California with 40 million people. And of course, access to scale in tech companies. This is what makes us special. And today it looks like that special thing exists more in Europe than it does in the States, which is why maybe there are less financial services businesses coming out of Silicon Valley compared to maybe in New York and Europe.
Dan, you're focusing on the US and getting your license before you break abroad in any way, shape, or form?
Yeah, so I mean, all of our background, all the founders, we all came from the stock market in the U.S. I guess at RBC we also worked in Canada as well, so we considered that market off the bat as well. But I mean, the U.S. is just a much bigger market, and we know it a lot better, so we're focused for now.
So you both are part of what's being known as fintech, very different companies. Where is this heading? More broadly, are the fintech players going to truly disrupt the banks? Right now, a lot of the banks are buying up fintech. There's a sense that, well, maybe the companies are going to get swallowed up and this will all slow down. Where is this going to end?
So my personal view is that the companies that are being bought by banks are going to get swallowed up and they won't change the world. I very much doubt that banks of today can be in control of a tech startup and actually, let the revolution emerge. I think that technology companies are now changing finance in a very meaningful way. I was just saying earlier that I think this movement actually started about 10, 15 years ago with companies like E-Trade, which started taking the old, brokerage businesses online. And then we have PayPal, now we have TransferWise, now we start to get stock exchanges. I think we're starting to see parts of the industry, parts of the universal banking business being done so much better by tech companies that these things are just going to fall off. So the big question is what's going to remain? Perhaps everyday banking, using a card and an ATM, maybe that's what banks do well. Maybe that's fine. Maybe we should be using the brands that we have today for, just this simple operation.
Yeah, so I'll just focus on the stock market because that's my world, and you've already seen a huge amount of improvement in the way stocks trade, just so you're saying with electronic brokers. I think the main benefits, the natural benefits of technology and scale and things becoming cheaper have already become apparent, but there's still a lot of opacity in the system where what's happening behind the current is still not clear at all. And think about how much better things could be if things were doing in an honest and fair and transparent way. And so I do think that the next big step is just having a lot more transparency into what happens behind the scenes.
Do you agree that it's speeding up? So think of, 15 years ago, brokerages, and then it took like 5 years for PayPal, and then took another 5 years for the next thing. I think now it's starting to move much faster. So I think that is interesting.
That's an interesting idea. I'm not sure how much I agree about that in the institutional trading space, because it's just such an, it's still kind of an old boys club, and it's still, yeah.
And before we leave, I wanted to be sure to ask you your advice for the entrepreneurs out there, the people who are trying to launch startups. Given your experience, what would be the piece of advice you'd have for them?
So I think the biggest advice is look at what Dan has done, and look at what other companies are doing, and please do recognize that it's actually not that hard. It's possible to solve practical problems, even if it's you and your friends. Usually you don't need immense amounts of capital. You can find ways these days to do it reasonably cheaply. So if you see a problem and you think you have a solution to that, and it's important to see that there is a problem that you're solving, it's not worth doing things just because it has a slightly better UX. But if you are solving a real problem, you can now see that it can be done, and like really complex things that stock exchanges can be done.
So I would echo that, and then we were having breakfast earlier, and Kristo mentioned that there's really nothing stopping anyone else from going into TransferWise's market, and he would even encourage other firms to do that, and really just the more companies are trying to do the right thing, trying to be transparent, like I would encourage people, everything that you do, just make sure that you're doing something that's genuine and honest and transparent and making the market better or the world better or fintech better. And don't be afraid about, stopping the competition necessarily. It's really just about making the whole system better, and that's just better for everyone.
Please join me in thanking Kristo and Dan.
Thanks. Thank you.